AltFunds Global presents How Banking Crisis Could Change Fintech Forever. Insights from New York Fed expert Cassie Johnson.
All of the information presented is for entertainment and information purposes only. Nothing discussed constitutes legal or accounting advice, an offer or solicitation of financial services, or financial advice of any kind. Our goal is to showcase alternative vehicles to raise capital. At no point will we be soliciting any investment programs.
Cassie, thanks so much for your time. Pleasure to have you here. First time on my YouTube channel. I've had the privilege of getting to know you just a little bit. You want to tell a little bit my audience who you are? I specifically like your background in the Federal Reserve and how you just try to disrupt what you refer to as the mortgage industry. I say you try to disrupt the whole banking industry. But we'll go with whatever it is you want to say.
Hey, Mrs. Mon, thank you, sir. I appreciate it. Cassie Johnson here, founder of My Own Pathway. We're a Fintech, PropTech platform, really revolutionizing, changing the mortgage market for both consumers as well as lenders in financial institutions. Background, again, as you mentioned, been in financial services for about 15 years before I started, jumped on the startup side, been at the New York Fed, AIG, Ernst & Young, Goldman, BMO, in the, again, different risk categories. So done credit risk, ops risk, enterprise risk management, model governance and model risk. And at the Fed, I was a bank examiner. I came in and again during the crisis, so really interesting time to be at the Fed, 08 to 11, so right in the middle of it. Had some great mentors at the Fed that really taught me how banking works, and it's really not how people think it works. There's this thing called safety and soundness, which is a core of the bank examination playbook. And really think of a bank examiner as an external auditor. Like here are the rules from a Federal Reserve system, OCC system, FDIC, CFPB, all these regulators that these institutions have to, abide by. And then, they get the playbook, here are all these rules. And you got folks like myself and other senior examiners that come in like, hey, show us how you're actually adhering to these rules. And then at the end of the day, we create these assessments or reports that we roll up for the larger institutions. It's a roll-up report, so it could be, at JP Morgan. We'll look at all the different examinations in the year, and we'll say, here's kind of what we saw, we observed, and most of the times, banks are running relatively well. There may be some issues, some concerns that they have. So again, in the crisis, there were quite a few concerns, quite a few new regulations that occurred after that. Dodd-Frank, model governance, model risk kind of evolved from that framework or the challenging period there. But again, it has created some regulatory burdens, but a lot more transparency into how banks are operating. So resolution and recovery planning came from that. There's so many other pieces of regulatory bank holding companies. So BHC for international banks that operate in the U.S. They stood up the international holding company or bank holding company structure to now have U.S. entities underneath those those structures. So now all of that capital has to be held here in the U.S. So a lot of different things have occurred from the 08 crisis. We pick up new things that occurred. So obviously we had a little bit of a crisis in 2020 with COVID and its impact on banks and consumers. So fortunately we have crises that occur. In the 80s was an S&L crisis, a savings and loan crisis. We'll have different things that trigger different reactions, parts of the global banking system. In the US, we have our own sets. We have contagion sometimes from other financial institutions globally that impact what happens here in the US. But
sure,
it's fun.
When the banking crisis happened, I remember the day. I remember my wife and I would drive down to Detroit, Michigan, Buffalo. I'll try to buy homes for like $9,000, believe it or not. How has that crisis and the changes the regulator did in the area of transparency, liquidity, and so on disrupt you specifically? And when I'm pointing at you specifically, because you specifically are trying to disrupt the mortgage industry. You're very well funded. You're trying to change something. You're trying to make. I understand your mission is to make the life better for a lender or for the customer. But tell me a little bit about the regulations beyond transparency and liquidity that you have to now deal with as a disruptor. What are some obstacles you're facing? What are some questions you're looking to have answered?
I mean, on the regulatory side, the good part, to be honest, on us, we're a fintech. So we are a facilitator working with the financial institutions that they themselves, to be honest, have more of the regulatory burden than we do as a fintech.
Right.
So I think us is kind of facilitating between consumers and originators or lenders, how to help both of them. So from a consumer standpoint, we would be, hey, here's where your risk profile is. Here's where a bank needs your risk profile to be. And then we help those consumers get to that level where the bank is more comfortable lending to them, and where it also creates, revenue opportunities for the banks and creates, less regulatory scrutiny from regulators, right? So
Sure.
Part of what happens a lot of times from a consumer standpoint is like, hey, there are 100 million consumers that are considered high risk, subprime. And so a lot of times institutions, the more well-capitalized, larger institutions don't really want to lend to that because there's so much more scrutiny that comes from regulators when you're lending to subprime or higher risk. So there's a huge untapped market for that. And a lot of times you'll see predatory lenders go into that space, right? Not all people that lend to that space are predatory. I want to make sure that we clarify that, but it creates opportunities for that predatory type lending. And so when you're thinking about, think about the largest institutions. JP Morgan is $3.5 trillion. Bank of America, Wells Fargo, they're all $2+ trillion institutions.
Right.
There's a ton of capital up there that can really help move the needle, but then they have more regulatory scrutiny. So in terms of the regulatory changes, liquidity, more risk-based pricing, Basel 2.5, Basel 3, insolvency and capital challenges for, delinquencies, for example, right? One-time delinquency for consumer creates much bigger capital impact now for these institutions. So they're shy to really provide access to capital, especially on a large ticket item like mortgages, right? Even though a lot of those are securitized by Fannie and Freddie. So you have kind of these aligned incentives or misaligned incentives.
Interesting. Before I ask you my next question, I have a story to share. So I have a law firm that represents me out of Zurich, Switzerland, which I don't think there's a debate in the world that Zurich is the place, or Switzerland is the place to open up a bank license. And this particular law firm that represents me, all they do is they build custom banks. They don't buy you a custom bank. They don't buy you a bank. They don't flip a bank. They don't sell a bank. They don't do divorces, litigation, traffic stuff, criminal stuff. All they do is they build custom banks. That's all they do, and they're based in Zurich. I had them speak at one of my events. One of the senior partners of the law firm, and who he works with, are central banks. His contacts are central banks, large banks, but that's his people that he talks to. He had a very interesting talk, which I thought was fascinating. And here's what he said. He said, consider I as a bank, the more assets I have, the more value I have. Mm-hmm. In fact, you talked about JP Morgan and how much assets they have under management. This was the aha that he said that I thought was fascinating. He said, when you open up a bank account with me, when you open up a bank account with a bank, most people think what the bank wants is your house or your car as an asset. And he said, that's the farthest thing from the truth. He said, you have something called a lifetime economic value. You have a lifetime economic value, And when you become a client of the bank, I don't care about the value of your car. I don't care about the value of your house. I care about your lifetime economic value. And that is what I'm booking under assets under management. I thought that was interesting. He suggested that that's how banks print their own money, print money out of thin air. Just look at how much assets I have, and therefore they create money out of that. When you borrow money, they're actually giving you your own money back. Because you have a lifetime economic value, they are giving your own money back. They're giving your money to you. They're calling it a loan. So when you think you're putting 20% down and the bank loaning you 80%, he had the business case on saying that's not the truth. Whether you put 20% down or 1% or nothing, 100% of the money you're getting is actually your own money. Then he gives a case study in United States, not in Timbuktu, not in Iraq, not in North Korea, in United States, where his friend is getting a house closure. His house is being closed by the bank. The guy's gonna be homeless.
It's an Oreo. It's another data.
He calls the bank. He goes with his buddy to the bank. By the way, my attorneys, I argue, the attorneys that I have are the best of the best just because of the business I'm in. They're the best. He goes to the bank. He says, you want to foreclose on my client's house? No problem. Here is, I want to also foreclose on the economic value you created for my client. And the guy didn't know, the bank didn't know what the hell to talk. What was the guy that's so weird? What do you mean I'm foreclosing on your house? What do you mean you're foreclosing on the economic value? And you should watch my video, by the way. He goes, the lawyers here talk to the lawyers here, the lawyers here talk to this lawyer. Long story short, he got the contract that says, if you sign this agreement, we will not foreclose, and you are not withdrawing the economic value of the client. And by the way, we've never had this conversation. He had this in a public event with my clients. He had that conversation, and I don't want to tell you lawyers don't lie, but this lawyer in Switzerland, phenomenal, like he's a reputable lawyer. And I just have to say because of what you said. Sorry. So with your experience in the New York Federal Reserve and the changes that you see from a regulatory perspective coming down the pipe, what are some opportunities for accredited investors?
I think we have a lot in terms of opportunities when financial services in general. Right? So I'll look at like one simple one from recent past.
Yeah.
You look at Stripe, you look at PayPal, you look at Wise, you look at all these payment services companies, right? Back in the day, it was the banks, Western Union, and I forgot what the other Western Union competitor was to send money, right?
Yeah.
And that didn't evolve for 30 years, 40 years. It was just embedded and very archaic and didn't move with innovation. And, a couple of companies figured out, there's an inefficiency here, and we could do this and partner with some of the infrastructure players and actually pull off a different, again, same money transfer.
Yeah.
And that has, again, payments, the whole payment system now is getting much more closer to cutting edge technology. Real-time payments, right? Before, we'd have to do 3 days. Real-time payments is just a liquidity pool. Let's be super clear. That's all it is. One big liquidity pool that everybody settles in overnight. But again, that took innovation. I think there's a ton of opportunity within the mortgage space in the US, for example, within home building, within consumer credit, true consumer credit when you're thinking about reassessing risk and stepping outside of the FICO bubble, which has kind of captured 90% of risk-based pricing and access to capital. There's a huge opportunity there. There's opportunity for underbanked, consumers in the U.S. as well as internationally, and bringing folks into the banking system at a price point that makes sense. Because typically large infrastructure banks are going to say, hey, it costs me
$12 a year, $15 a year just to maintain the infrastructure for a new account or a different account, right? It's actually going to be much higher than that. But there's all these BSA, AML, account management pieces that, that they have to maintain. So they're going to say infrastructure, I got to be at least making 25 to $50 minimum, let's just say, whatever the number is. There's got to be some margin there. So if you're looking at underbanked communities, you'll be like, well, how much money am I really making out of that individual? So that's where I think a lot of times, fintechs, other new players that don't have that same level of infrastructure cost can definitely disrupt some of these markets that still have huge gaps from a servicing standpoint.
Sure.
And so I think there's, again, RegTech has been really interesting. When you think about all these disparate regulators that are across just the US, right? Or even internationally, how do you actually create technology and tools that help you to actually operate, above board and in compliance with 8 different regulators, depending on how big your institution is. You might have some insurance pieces in there. So I think there's different opportunities in terms of to disrupt some efficient places. Blockchain and banking is going to change a lot. You fully get that piece implemented. So the folks that are ahead of the curve in terms of blockchain and implementing their operations on blockchain and getting, some of the regulators or some of the government GSEs on the mortgage side involved with blockchain, the efficiencies there that can be gained, the cost reduction there that can be gained, the transparency there that can be gained is astronomical.
Sure.
Right? It's huge.
Now, what's unique about you specifically is you come from big bank and from fintech. So you've seen big and you've seen small. Putting those two together, other than blockchain, where are some opportunities you see for investment for people that want to invest in this area?
Again, I think there's huge opportunities across, AI and risk model. There's some challenges within that because within financial services, a lot of the data is not clean, for example. Mm-hmm. So you hear AI in terms of banking, financial services, everybody wants it, but they also understand the data quality and the issues with this, like the archaic and bad data, to be honest, that's been captured in financial services over the last 50 years that we have to cleanse a lot of our data and harmonize a lot of our data in financial services for AI truly to take off and be impactful, as well as reduce and remove some of the biases from even some of our past decisions. Because at the end of the day, if you think about redlining and all these things that have been going on, they'll somewhat go on if we literally program that in or train our models to give us certain outcomes, because we're going to tell the models that these outcomes are correct. And we already know some of these outcomes are not correct. And so all it'll do is just make those outcomes much more efficient. And it'll just keep the same thing like, hey, these people do not deserve access to capital. That's exactly what AI models are going to do, because that's what your data is going to be telling it that these set of people are the best risks. Yes, kind of, but there are
biasness.
Yeah, there is some bias that led to this outcome, and you'll continue to train the model on that specific outcome because, again, it's data. It doesn't have context. It doesn't know what redlining is and how the legal structures and frameworks, the zoning challenges that were there that kept certain people in certain neighborhoods and certain bad places. So there's all of that stuff. We'd have to think about how do we make sure that we train the model to take those biases out and we cleanse the data to remove those biases. If we truly want to make, for example, true risk-based pricing and true risk-based assessments, as clean as possible.
Before I ask you my last question, I need to share a story so I can create some context for you. I recently participated in a masterclass that was being taught by 3 former deputy CIA directors. Not the director of the CIA, but deputy director of the CIA, 3 of them. We're talking at a masterclass about leadership. And the first thing they talked about was the biggest mistake they did with Iraq. They all assume Saddam had weapons of mass destruction. They didn't have a spy there. And they all did this thing called, if you're Saddam Hussein, what will you do? Well, I have chemical weapons. I'll build this, I'll build that. But they didn't have a spy in Iraq. And so the result of the recommendation was go attack. Mm-hmm. He's got biological weapons, and look at how many people died because of those bad decisions. Fast forward, years after, they're now in Obama's office, and there's a highly wanted individual, highly suspected individual somewhere in a compound in Pakistan, and they want to know if this is bin Laden or not. And they want to know if they should go in should they go into this fight? And they have three different, and so Obama says, what's the percentage that guy that you guys are saying is a highly, wanted guy, like you guys are seriously interested in this guy, what's the percentage that guy's bin Laden? One of them said 89%, the other one says 75%, and the other one says 69%. Linking it to your comment about biasness, Obama says, why is it three of you guys have different percentages? Is that guy bin Laden, yes or no? And none of you guys are even on the same percentage sign. Like, what's the percentage? And the answer for them was, we have individual biasnesses. The guy who is at 80% or 89% that's bin Laden has been in the field for many years, and his job was to take down a lot of the terrorists in the world, and he was successful at it. But the guy who was at 69% joined the CIA when they were making a decision whether they should go to Iraq or not. So clearly he had a failed experience in making that decision. Yeah. So he's not at 80%. He's at 69%.
He's conservative. Yeah, right. He has the conservative approach, yes.
100%, okay. So now I want to link it to you, and I want to link that to you. So because you come from a risk management background, knowing that I as a human being have a biasness that's different to your biasness and different to that guy and that guy's biasness, what are some risk management related questions I can ask about the opportunities in the marketplace that the banking industry is facing? What are some risk management questions I could ask, given that my biases is different to yours, that will protect my wealth in all the disruption that fintech is causing the banks?
So I think the fintech disruption model is evolving.
Right.
And initially, I would say fintechs were going after untapped areas, right? Payments infrastructure, ignored, right? Didn't see a lot of money in there. So banks didn't invest in there. So typically looking at fintechs are like, hey, I got some experience in this, or I know some area that's inefficient. I'll go after it. I'll see if there's enough juice in there for us to create some opportunities. Where I think it's evolving to now, it's where, again, the banks are saying like, all right, yes, we keep getting bigger. Because remember, in 2008, there were $0 trillion US financial institutions, US banks. But there was zero. We have 4 now. And multi-trillion dollars, right? JP Morgan's 3.5. So we went from 2008 when they, remember the concept, you ever heard of too big to fail?
Yeah.
This was too big to fail, less than $1 trillion in 2008. We're at 2024 and we have $2 and $3 trillion, right? We've gotten even bigger, right? So we have a concentration. So think about concentration risk of assets. I think where banks, the way banks, I believe, and a lot of large financial institutions are looking at fintechs is outsourced R&D. That's it. If you think about, hey, instead of us, JP Morgan, putting $200 million into R&D for all these different products, spaces that we operate in, wealth management, retail, commercial, investment banking, they got a bunch of assets. They don't have the time, or they don't want to stand up innovation centers, and they have tried, they have failed. Because again, politics internally creates some challenges, again, coming from big environments. The fiefdoms, So from a strategic standpoint, where I'm seeing a lot of large institutions saying, hey, we'll keep our eye open. We'll keep our hands in a bunch of different pots when it comes to fintechs and innovative and disruptive companies. And if somebody solves a problem that's either one of our problems or something that's interesting enough for us, we'll invest in them or buy them.
I love it. I love it.
Or partner with them, right?
I love it. Yeah.
It's super simple from their perspective. They're just like, and again, from a fintech perspective, you don't have the balance sheets, right? You don't have the relationships. But if you have some innovation, right, that's what you're going to bring to the table. You can innovate and partner with organizations that have distribution channels, have balance sheets, already approved institution, financial institution, banking licenses. So you kind of pick and choose, right? We'll focus on the innovation R&D part. We'll focus on the customer acquisition. We'll do really well on this. And then we'll partner and we'll see how we can actually, solve something together. I think that's like, the FinTech 2.0 version, right? We want to go think about blockchain. Somebody to do a great job of integrating that through the entire banking chain is going to benefit all these different partners. Somebody's going to have to be innovative and actually figure out how do I leverage some parts of my operation on there, as well as expanding that. So I think that's where a lot of opportunity lies, is within those strategic partnerships. From a regulatory standpoint, from a financial institution standpoint, from a fintech standpoint. So I think that's the next kind of what you're seeing: M&A activities, investment activities, partnership activities pick up. So I think that's kind of where it will evolve to.
Cassidy, I very much enjoyed this conversation. Can you tell my audience a little bit about who you are, what you do, and how do they contact you if they're interested in buying some of your services?
Yeah, so again, Cassidy Johnson, the founder of My Home Pathway. We're a fintech, prop tech platform that works with financial institutions, banks, lenders, mortgage lenders that have probably a little bit higher risk consumer profile or portfolio. So think if you're in the mortgage space and you're rejecting 20, 30% of your mortgage applicants and you don't really have nothing, you don't do much with them, right? You can be able to send those consumers to us. We work with them to get them back to your underwriting standards, your approval standards, and then we kind of hand those consumers back off to you right at your approval standards. So they get access to home ownership, they get access to building wealth, and from a financial institution, you get access to, again, a much more qualified consumer that meets your standards.
How do you do that? How do you upgrade people's credit ratings or whatever it is?
Well, our platform, we have a recommendation engine that assesses your data. So consumers come onto our platform, they connect their banking, credit, and income data to our platform. That gives us the ability to snapshot you and assess where are you today and where do you need to get to from an underwriting standpoint. And our recommendation engine provides the roadmap. So it gap assesses you for credit. Here's where you need to get to. How do we help and provide you the specific actionable items? So it could be things like rent reporting, credit builds alone, secured cards, or leveraging your cash flow to pay down credit utilization. So it just depends, right? If wherever your gap is in your profile, we'll be able to assess that and be able to think of, instead of going to one-on-one counsel, which, folks that are busy, don't really have the time to schedule all that. Yeah. We'll do it in your hand, right? It's right on the palm of your hand, in your desktop or in your mobile phone. So we can guide you to that place. And in that same vein, now we're providing financial literacy, helping you get smarter around personal finance, and just truly building, reducing the information asymmetry. And I don't using bigger words there, but again, the goal is like, how do we simplify that for everyone? So a fifth grader can understand mortgage and credit and finance. And then that's where you empower people. At the end of the day, people, a lot of times they're intimidated because they don't really understand finance. And a lot of finance people build stuff for non-finance people. And you wonder like, why don't they, get it as easily? We got to make it simple, right? We got to take away a lot of the intimidating factors that kind of get people not as excited and easy to work with. So that's really what our platform does, and really kind of, again, guides people in a really easy way so that they become better, smarter consumers.
I love it. I love it. It's been a pleasure. Thank you so much.
An easy way to get to me if you have any follow-ups or questions is castleigh@myhomepathway.com. So CASTLEIGH at myhomepathway.com.
And my experience of knowing you is you're very easy to get hold of. Much more, you're just a collaborative human being. And sometimes in a snobby banking world, it makes a difference.
Man, look, we're all trying to do the best we can for as many people as we can. So if again, anyone needs any help, assistance, please reach out. We're here to help you as much best as we can. And shout out for you for the work that you're doing and helping both financial institutions and consumers to find the best products, services for themselves. So
Sure.
Anyway, we can help. We're here for it. And thank you for the opportunity to share with your audience today.
Would you like to know about our next event?
Why would you attend AltFunds Global's banking events?
Unlock exclusive financing secrets with top bank CEOs and family offices. Build powerful connections, secure loans beyond retail banks, and fund your legacy. Join financial leaders at AltFunds Global offshore events.
For the AltFunds Global team, just fantastic. I mean, it was a phenomenal event. It really was. You brought a great group together from the speakers that you brought. They were terrific, knowledgeable, serious players. And, thank you to all you guys because you made yourselves available. It was just great. I've been to a lot of lectures, a lot of workshops, a lot of business events. This is definitely the best one. This is definitely the best one. It is.
Hi friends, I now want to take a minute and answer some of your frequently asked questions. One of the common questions I get a lot is, Timur, we've learned a lot from you through your YouTube channel. How do we learn more? Can we fly down and meet your team? And the answer to all of that is yes, yes, and yes. But if you want to learn more, my first invitation is to become a member of AltFunds Global. You simply go to our website, altfundsglobal.com. You sign up to become a member for free. You get access to webinars, offshore events that we do, and content that we never, ever, ever, ever publish on YouTube. I promise you that it's worth becoming a member for sure. The second way that you can learn a lot is I'm a published author. Structured Financing, Demystified, Hypergrowth, just multiple books on Amazon that you can get access to. I highly recommend going and checking out some of these books, getting engaged into some of the stuff, that strategies and tactics that we're using for ourselves, for our families, for our friends. You definitely want to check these things out for sure. Another question, I guess, Timo, why are you so passionate about getting a bank license? Why is that so important? Well, the truth is, our mission within AltFunds Global is to help businesses become self-funded for life. Imagine you run a coffee shop and I run a coffee shop. Imagine we buy the coffee beans from the same grower and my coffee shop is right across yours, like really right across yours. Our competition is probably nil. But if you have a bank license and I don't have a bank license, and let's say I made $500,000 and you made $500,000 in income, but if you have a bank license, you are depositing a bank license with a central bank of the country where you own your own private bank license. That means, repeat this again, you are depositing your money with the central bank of the country you have your bank license on. So $500,000 deposited with the central bank should give you a line of credit of 10 times multiple. So that means you get a line of credit of $5 million. Now, it's not free money, it's a line of credit of $5 million. Now, if you draw that entire money out and you go to whichever country you're currently resonating in, the country you're doing business with, and in real estate, you want to buy a house, you put 20% down and you get a loan for 80%, same thing. You put $5 million down with a business plan to your local bank, whoever your bank with, and say, hey, I want to grow my business, my technology business, real estate business, pharmaceutical business, whatever business it is. I'm a venture capitalist. I'm putting $5 million down. Your bank gives you a loan at four times more, so now you get a $20 million loan. Now it's not free money, it's $20 million loan. What can you afford to do with $20 million that I cannot afford to do at $500,000? Could you invest in artificial intelligence? Could you invest in hiring better people? Could you invest in advertising? Hell, with that amount of money, could you even buy auxiliary businesses or invest in auxiliary businesses? I say you can, and that's why we within AltFunds Global are so passionate in helping clients become self-funded for life, and getting a private bank license is one of the vehicles that I am personally very passionate about helping clients on. Another question, I guess, Timur, you charge a consultation fee. AltFunds Global, the team charges a consultation fee. Why do you charge a consultation fee when you guys can make so much money on the back end? It somehow slows me down from taking a credit card and paying you money for it. Well, here's the truth. We offer our content, millions and millions of dollars worth of content complete for free on YouTube. We don't advertise as of the date of doing this video. We don't advertise on YouTube, Google, or we don't do any kind of advertising at all. And what we find is the volume of traffic that goes into YouTube attracts people that are tire kickers, people that are fraudsters, people that have mental health issues. When we charge a small consultation fee, this deters the hacker, the fraudster, the person who's shopping around, the tire kicker. It eliminates all that and allows me and my team to be on calls or meetings with customers we actually want to do business with. What a concept. Now comes, this is better. At the time of doing a transaction with a client, that fee they pay for a consultation call, we refund it. At the conclusion of us doing a transaction with a client, we refund 100% of all the monies that they paid on consultation fees. This allows us to work with people that are committed to working with us, are serious about working with us, are not tire kickers, are not people that are like, they don't know what banking 101 is, and they're there to waste our time and energy. Just eliminates that. And me and my team are very proud of doing that. Next question, I guess, Timur, the alternative funding industry overall has a lot of fraudsters in it, has a lot of deep fake in it. What are you doing to protect us, protect yourself? So here's the answer to that. Any industry that has a lot of money by default attracts a lot of fraud. Let me say this again. Any industry that attracts a lot of money by default attracts a lot of fraud. I don't know who you bank with. If you bank with one of the top 20 banks in the world, pick a bank you bank with, or you use payment processing companies like PayPal, these companies see a lot of fraud every day, from fraudsters mimicking their website to mimicking their email addresses, and in cases like mine, once a year or twice a year, some idiot, excuse my language, decides to copy my picture on social media, tries to create a fake profile of me, and goes on social media selling scammy transactions. Now, we have the technology and the resources to catch that, usually within 72 hours of that happening, and then cause legal action against that fraudster. We have the financial resources, thank God, to do that today, but that's just the nature of this industry. So what we do to protect ourselves is we never solicit on social media anything, nor do we solicit in general. We offer a lot of educational materials, but we don't solicit. You'll never see me or any of my associates on any social media trying to sell anything, ever. Second, all transactions that we do, money always has to go through a reputable law firm. All transactions we do, money always has to go to a reputable law firm. You know, we never ask the client to send us money or anything like that. Now, I do want to take a minute and talk a little bit about my competitors. In the United States, in the US alone, US has 3% of the world's population, and they have over 60% of the world's lawyers. In the United States, that's a fact, have 3% of the world's population and over 60% of the world's lawyers. I have a lot of legitimate competitors in the United States and around the world that unfortunately have been sued for wrongful things that other people have done. There's a lot of negative stuff on social media or websites about some of my legitimate competitors. And I want to tell you that a lot of my competitors are legitimate, they're hardworking people. I know them, they deliver real results. And unfortunately, they have negative comments or fraud or even losses against them. The reason within AltFunds Global doesn't have a lawsuit against it or me, Tamer Zaman, don't have a lawsuit against me, or people on social media saying that we're fraudsters or something like that, is simply because of my lack of vision. Every company you deal with, every major company you deal with, whether it's the cars you drive, Ford, Lexus, I don't know, GM, or Facebook, Google, YouTube, whatever you use, or medicine you have, like Tylenol, all of these companies have lawsuits against them. A lot of the companies you work with have litigations against them as just part of the growth. At some point, the business needs to grow exponentially, and that's when you have to see lawsuits as just the nature of the business growing. The fact that we don't have it is because of my lack of vision as the CEO and like trying to bark a tree like that. Now, I see that changing as we buy businesses that have other CEOs, as we grow. We have over 800 registered brokers with us. As that number grows, it's not normal for our business to continue growing without some idiot calling us fraudster, some idiot trying to sue us, or something like that. If you want to take advantage of the alternative funding industry, I'm going to tell you this is the industry I love. I'm going to tell you this is the industry that I've made a lot of money with. I'm going to tell you this is the industry I've helped a lot of clients make a lot of money with, friends and family make a lot of money with. And if this is an industry you want to get involved in, I recommend meeting the people you want to do business with, like physically flying out to meeting them. If you can afford to hire an investigator, we use a lot of former FBI, former CIA people. These are people you can hire to do background checks. It's not only do these people have lawsuits or not, or other losers calling them fraudsters or not. I'm telling you, a lot of my competitors are really good people, and they're not fraudsters. So do your own due diligence, listen to your intuition. We're really interested in working with some really good people that are vision-driven entrepreneurs that really want to serve the world, and I think we have some things that are really amazing to offer. Another question I get is, Tamer, we love all the services of AltFunds Global. What are the top 3 services you offer that we should really seriously think about, call you or your organization and get you guys involved? But my favorite service, the one that makes a lot of sense, is the trusted advisory service. This is when we become your chief banking officer. We work with your CFO, your legal team, the CEO, the COO. We look at where your organization is, where you want it to be. We look at banking programs that make sense for your type of business, that are proven and would work to generate access to alternative revenue sources for your business that makes sense. From that, we then create offshore tax structures, offshore bank accounts, offshore bank licenses for your organization, so the revenue that gets generated has a channel to go to that is well protected. We have a lot of domain expertise that I do not share ever on YouTube. It's not like a lawyer who's like, go create a trust account and cooks out it. Like we don't do. We do some very sophisticated stuff that I'm very proud of. That's our intellectual property. And so the trusted advisory services, where we become a trusted advisor, is one of the things that I would recommend everybody to look at. It's a monthly retainer, you pay for it, but let me tell you, for every penny you put in, that you get tens of dollars out of it. And I think you're not going to get this amount of expertise dedicated to your business. So that's something I would recommend you to think about and sign up for. Second one is, if you're looking for access to capital, we have a lot of unique programs like Rent a Rich Uncle that we can support your organization as long as your organization is a successful business and not a startup, not somebody who's going bankrupt. It's a successful business that has real cash, real assets, and is generating something real, that's real growth. I think we have some avenues for accessing capital that others simply cannot offer. And the final one that I love is we have a lot of asset management structures that are very unique to our intellectual property that I love to share with you. If you have assets, you want to grow, you want to get bank license, you want to set up a trust, you want to work with multiple central banks, do some really cool stuff. I think I'm the only weirdest person that has real expertise and experience in doing this stuff. And so my name is Tamer Zaman from AltFunds Global. Thank you for following us up on YouTube. If you're doing that, thank you for trusting me. Thank you for trusting my team. And on behalf of my team, I just really want to say thank you. And we look forward to the opportunity of serving you.